Ayo, guys, it's your guy here, Panda FX. I just want to show you how to trade boom and crash successfully. Guys, some of the people they are struggling with boom and crash, trying all the strategies. Guys, don't worry about this thing of boom and crash. It's not a problem because when you know that you can still do better with when you're using the technical analysis, you can still do actually when you know that you mastered this thing of technical analysis, use that technical analysis to trade boom and crash. It's not a problem, it's all, and you will, I know actually you will win, and I will show you how to use that strategy and which time frame to use as well, you understand, because you can even struggle with the time frame. These things, it can happen whereby you know when to actually it can happen when you don't know when to open the orders, when to close, and then get hit by the spike. So without wasting time, those who don't know Deriv, this is the actually the website for Deriv. I will just going to leave the link in my description below, so that you can sign up with the broker. For my side already, I do have the account with the Deriv. All I have to do actually is to do what, to log in so that I can sign in. So guys, I'm not going to show you actually how to log in, all of the stuff, and then so I'm just going to go straight to what, MT5. Let's just go, guys. And we're back again, guys, with another strategy. Let's just quickly rotate our phone. We just have to go to landscape. Oh, it's not rotating. Let me see. Okay. Yeah, the first step. Let's rotate our phone. And I encourage people to trade Crash 100, and then also Crash 500 and Boom 1000. The reason for me why I say this, I think they are respecting technical analysis, this thing. And I will show you why I'm saying this. I've got the proof. And yeah, those are actually the nice ones to trade, you understand. Now let's focus on Crash 1000, and then we'll go to what, Boom 1000 and Crash 500. It is the last one. Okay, first of all, guys, I want you to actually pay attention. This is the first time frame that you're going in. You understand? You're going to the first time frame, which is H4. You understand? So why are we going to H4? We're going to H4 to look forward the overall direction of the market. You understand? Once we get the overall direction of the market, then it is the time whereby we need to know when to buy and when to sell. But unfortunately for this side, my strategy, it is based on only buying crash and then selling boom. Some people they say it's dangerous. I say why are you saying this? Because only if you know when to buy and only when to sell on these things of boom and crash, and you are 100%. Then you just have to wait for a right for a right what for a right time to execute a trade. So let's just go in, guys. For my side, I'm going to identify my trend. You can see we are in what, uptrend. This is an uptrend. I'm going to use this thing. This is the first thing that I'm going to do. I can see for my side that this line, it is being respected. You can see that it is being what, respected. Then unfortunately when I'm doing this, I can actually know that I'm in a what, overall direction of buying. So which means that I'm expecting buyers. But I should know when to enter my buyers, when to what, not to enter my buyers. Because for this side, I'm just going to do it like this. Oh, it is not showing, but yeah. And then we can see that when it has to form this thing which is called the higher highs, the higher lows, and then this is the what, one, and then there's the break of structure again, and then we're looking for another break of structure, because what I'm doing, I'm looking for the break of structure where the market is actually forming the higher highs and the high lows. I'm just going to use this thing as to show you guys where I'm talking about. You can see this from here. We have the higher high and then the higher lows, and then the highest point, which is the higher high, and then higher what, higher low, and then it is no longer respecting what, the structure. It has to break up. This is the formation of what, of a breakout. Immediately when it breaks the structure, you just have to wait it for it to retest, and then you, when are you seeing it is going to retest? We go to smaller time frame, guys, to do what, to confirm our buyers. For this side, guys, what are we waiting for? We are expecting that we can see that we are in the what, the highest level, which is mean where this is where exactly why, I mean, where the sellers are in control, but we can no longer sell anymore when we have the formation of a breakout. And then for this side, when I'm done with what, H4, I just have to go what, step by step, go to H1, and then go towards M30 to look for what is exactly going on. For this side, let's go to what, H1. So let's see now. Can you see, guys, here? I'm just going to make it is a nice trend, guys. After we build, after we use the trend line to mark the overall direction in H4, we just have to come again to what, to another smaller time frame to look for the trend, because we need to look for trend. What is important, guys, it is the trend, to catch the overall direction of the market, because the trend is your friend. They always say something like this: the trend is your friend. And then once we know that we are in this trend, and then we can know that, okay, that's just because of we are in the what, the buyers direction in each four, and then in each one we have another what, the uptrend. You understand, the uptrend. And then for this zone, I'm going to go again to what, M30, and I'm going a little bit again to M30. Allow me to touch it, to make it to touch here, and then to make it again to touch here. It doesn't matter if you are trading, I mean, if you are putting a trend line like it actually, let me say, it is not necessary to put a trend line like this. You understand? Because sometimes you can wait for the market to come to this zone, and then it is not coming to retest. For example, imagine you're waiting for the market to break the structure to come here so that we can go again with the what, with the buyers. But unfortunately, it fails to do what, to come to this zone. Even though you put this line here, you just have to come again to see that the market was no longer respecting this level, but it formed another something new, something new. This is something new for the market. Follow the market, and then the market will reward you. Can you see, guys? Now we are in this situation. Now it is something like the market touches this point, which is our lowest point, and then it is in form of retest, and then come back, and then retest, I mean, yes, retest again, which is mean it is there were first touch and then second touch, and then it went up, which means that when we were there, when we were here, we knew we were going to be 100% sure that we are buying here, because here it is what, the structure where it is broken, guys. Can you see it? This is the zone, the formation of what, of breakout. And then we are waiting for, obviously, the buyers for this zone. Can you see what I'm talking about, guys? And then there's a point where, guys, you must wait. You must wait to know that, okay, for this side, for this time I'm going to execute the trade, for this time I'm not going to execute the trade, and I'm going to go further towards M15. Why I'm going to M15? Because I just have to know where the market is going again on the lower time frame up until I reach the lowest time frame, which is sometimes I trade the lowest time frame, which is M5, but I don't recommend that people should use it because I don't think it's good, because sometimes you can just hidden by the spike all over nowhere, and then start to feeling like the market is not going in your favor, and then you take the losses. Guys, you should be patient with the market when you are trading this thing of booming credit, because you can hit them by the spike, but your direction is right. You understand? Can you see this is the highest point? So we should actually wait for the market to form what you call the retest. But unfortunately for this side, just because of we are too respecting technical analysis, so we just have to know that there's a formation of what you call a flag. So the market touched this point, this is the highest point, and then another highest point here, and then what you call another thing like this, because you cannot see it only if you are straight from, let's say you are not trading from higher time frame, you just focus on the lower time frame, you will never see that the way the market is going. And then even if we broke this structure, we broke this structure, and then we're facing the downward trend, we will already know that there is a point whereby we are no longer respecting this line, but the market is going to come to this level because we break the structure. Then this is where, guys, we're going to have something like this in this for this nature, and then we're going straight toward to this zone, and then this way actually the final decision that okay, we should expect the buyers at the next time actually when we are also about to trade. So now here we are here we are we were having something like a flag, you understand, we call it the flag, and then some people they just call it what you call them, this is a rising wedge. I don't know, because we don't call it by the same names. So it depend. As we can see for these guys, we are still respecting our uptrend trend. So someone can just place the orders for what? For buyers. The reason why that person placed the orders for buyers, it is because that person was too well, just that person, he or she see that it was a formation of a breakout of this structure, because the market was respecting this level up until it is no longer respecting this level, and the formation of a breakout of this is the highest point, and then this is the weak retest, and then the market is still pushing up, you understand. This is why someone can actually open the orders. For my side, I can even grow the small account straight from $5, only focusing on what is important and when to execute the trade, because someone can just hold from $5, open the trade straight from here, and then you know that you are holding only if you are sure of what you're seeing, I mean what you are seeing and what you're trading. Yeah, then you can still do better. And for this side, guys, if I was here at this situation, I was just going to come straight to what the smaller time frame, and then I'm not going to execute the trade. The reason is because of I can see that the market it is the highest level, and I don't see anything of what you call the breakout of the structure, because remember, this is the highest zone, this is the price where the market it tend to do what, to retest, and then I don't see any of this. Let me zoom this thing a little bit and then show you using this thing. You see, guys, if you are here now, and then you see that the market it is, you see this price is the highest price, which means that it is our highest price, and if the market go above this zone, then it is the point where we should buy actually. And then if it makes another what, a spike, which means that the market still need to do what, to restart to this zone because it is the strongest zone. But if you see that the market is still doing what, buying, and then it is no longer respecting this zone and it is above the zone, this level, this price, guys, and then we know that we are expecting what the bias is the one actually should open your orders immediately after the breakout. Some people they just wait for the what, for the spike. It's where you're going to expect the spike immediately after being above this level. Then there will be information of a retest, information in terms of a spike, and then is the point where you should execute your buy orders. And then without wasting our time, I don't want to make this video too long because I can see that I wasted so much time explaining crash 1000. Let's go to boom 1000. Okay, this is one boom 1000. I'm going to go here and I'm going to make it fast because I just explained the strategy. Let me come here and do this thing fast, and then not to make the video too long. You can see this is the actually what is happening here. We're facing downtrend, then here is another thing, trend in another trend. You can see when the market is actually coming in this zone, it tends to do what, to go back, and then here it tends to do what, to go like it is the point, is the highest point. When the market reaches our low on the highest point here, it will retest going back, you understand? So let's see what is going to happen and what will happen. And if you are the type of person who want to follow my strategy, unfortunately you just have to do the same what I'm doing. You just have to sell onward and boom 1000 and buy crash. And then for this zone, guys, for this side, I'm just going to do what, to wait a little bit because we are in the highest zone here. This is the highest zone. Can you see it, guys? From this side, this is the highest zone. So if it happens that the market broke this structure, it will come here and then actually come here and then actually come here. If it happens that the structure is broken, and then when to make our selling, and when are we expecting the selling opportunity, because this is where we're expecting the selling opportunity. The selling opportunity, obviously, this we're going to get the selling opportunity at this zone. You understand? This is the zone that we're going to sell the selling opportunity, because, and then this is our take profit. You can say take profit 1, take profit 2, and then no longer having any trade because we're expecting the buyers. So the spike will catch you here, and then you go. And then even you are the type of a person who trade the spikes, you can still put a stop loss here and go with the what, with the flow, if you are the type of a person. And then for this side, guys, you just have to wait for something like you will realize that this thing of boom and crash forms something like a doji, the hammer, what we call it, the hammer candlesticks. So that one are pointing up. If they are pointing up, then the market is going down. Let me show you what I'm talking about. Immediately we get this opportunity for this of thing of hammer, and then we are 100% sure of our trades. Can you see this? For this zone, the market, we have something like a hammer. It pointed up, and then the market was no longer going above, and then we are going again down. This is our lowest point, and then here again we'll come back to retest. We have something like a doji. I don't it's called a doji, yes, no? And then we go below this zone, and then this is the zone where we should expect what, the sellers, because here is it gave us what, the zone to do, to actually to the lowest point actually, and then this is the highest point. And then for this side we just have to wait a little bit, going step by step to smaller time frame to see any anything that is trying to happen and then execute our trades. Because another thing that I've realized about this, here we have what you call the first leg. You understand, the first leg, and then you have breakout here, and then the market is still pushing up. You understand, which means that I see something like this: the market goes up, you understand, and then when it goes up and then it goes down, and then when it goes down it goes again up. And then if it happens that, as I told you before, if it happens that it broke the structure, it's going to come here and then come back again to the zone. Without wasting our so much time, guys, let's just conclude the video, and then I will see you again with on another video. Thank you guys for watching this one, and I hope you enjoy trading the spikes. Trading this thing of boom and crash, selling boom 1000, and then actually buying crash 1000. See you guys. Subscribe to my YouTube channel, and then I see you on another one.